Good afternoon. It's 5:30 p.m. and we're going to reconvene at 5:30. We do have the Madam Secretary, Senator Regine Biscoli, in the audience, and we will wait for the arrival of some of the other senators. So we'll take a 5-minute recess.
The Committee of the Whole is back in order. Chairman Uggan has asked me to resume the chair to try to see if we can figure out a way out of this. There was a 6-9 vote on the Bill 323 as amended by the committee and substituted on the floor and further substituted by the Committee of the Whole. I've been advised that the Director of Administration, the Director of BBMR, and the Director of Taxation will be here at 7. Maybe at this point, members can express what it is in the current bill that causes them to vote no, and what would, so that we know exactly what it is that we can't go forward with. I understand there's a couple of members who will not vote for anything with a taxation provision in it. Bill 323 has tax provisions in it. The only other way that I could see us moving forward without any tax provisions is to go to 237. If no taxes are going to be on the table. So we can start at page, from the very first page of the bill that we have, that we voted down, and delete the sections that you feel that you can't live with. But you all have to remember that in order to be able to fund the hospital that you want to fund, the charter schools that you want to provide for, I'm not sure how you figure that the 5% is going to be able to do that. So, Senator Torres.
Mr. Chairman, thank you very much for assuming the chair of this committee. I think that we greatly appreciate your efforts. Just to start the dialogue, although I voted to advance the bill, I think that what may be a bone of contention for a lot of people is SAR. And my suggestion is, if there's a way that we can apply the tobacco tax increase to the Healthy Futures Fund, where it is appropriately, it should fund appropriately, then that can perhaps be offset against general funds appropriated to the GMH, and we can back out some of the balance of the SAR amount, which a lot of people, there's been a lot of discussion about whether that's a realistic revenue source, whereas we can at least be sure that the tobacco tax is a realistic revenue source. So that would be, to start the discussion about how we can offset areas that are of concern to many in the public and perhaps many in this body, that might be one area that we can begin to tinker.
That would probably entail us going to the section where we did appropriate the $9 million for the L&D, and if someone wants to make the motion to strike that section, and so we have that 9.3 back on for our use, then we can go back in and try to figure out what in SAR could be covered Senator Uggan, and then Senator Nicholas. I'm sorry, Senator Torres. Did you have anything further that you wish to add?
No, you can proceed. I may have some comments later, but thank you.
Okay. Senator Uggan.
Thank you very much, Mr. Speaker. Mr. Speaker, thank you also for reassuming the seat, the chair. Mr. Speaker, there are several issues that were discussed by a number of our colleagues. One is the SAR revenue fund, and then also inclusive of the tax amnesty proceeds. And the major reservation behind the tax amnesty, and this is my observation, is primarily because in that particular case, the figure that was shared with us yesterday, if not the day before, was that the only remaining balance to be collected from the tax amnesty within the next 20 plus days is 9.3 million. So certainly that brings up a concern about all of these allocations of the 16.1. So that's another matter to address, Mr. Speaker, and I know that you suggested to go to the GMH initially. I will, I guess, step back and await any motion that's going to be made in regards to the application of those proceeds, because I believe the chairman of health is in the room, and it would also be appropriate to get some comments from him with regards to the allocation of the additional resources to L&D. Thank you, Mr. Speaker.
Any other senator wish to place on the record some of their concerns with the bill that, and why they voted no, or what would make it more attractive? Senator Snogestein, did you have a comment?
Yes, Mr. Speaker. Number one, and you know at 7 o'clock the Director of Revenue and Tax will be here. But what my concern was, we raised the tobacco tax. It was 9.35. I support the maternity ward being built, but it's not like if you drop $9 million, the building shows up. It's not going to happen that way. And the tobacco tax is driven on as they pay. So it's not like you have the money instantly. So that's one of my major concerns. And at the same token, we have to take a look at the other agencies. And just like the SAR is driven, and the director will present it. There's only so much that's collected monthly. And I'll leave that for him to discuss. But I was concerned about, there's agencies that we got to keep alive for a little bit more than just 3 months and hope that they'll collect to make it reasonable. And based on the sheet that you provided, or that was provided by the OFB, or going back to the bill, Chapter 2, I support the 229 million. And that even the increase of the 620 for charter school. And if that's the route we're going to go, Mr. Speaker, we can go down each section and identify how we need to fund it. But I believe that when the director does show up, I think it will show some light on the difficulties, the mechanism that drives the trains on collectibles, on collecting cash. So I'll leave it until that, but if we wanted to go section by section, Chapter 2 I support fully. That includes even the funding of 620 students for Island.
Any other senator wish to be heard? Senator Rodriguez.
Thank you very much, Mr. Speaker. I'm sorry I didn't catch perhaps the first part of this session. So I don't know if are we proceeding by going section by section again, or?
Not necessarily. I was trying to figure out what it was that people voted no on. And if you wanted to make a motion to strike those sections, then we as a body can go through it. Okay.
Okay. So if that's the case, Mr. Speaker, there are some concerns I've had, and I did state it throughout some point in time during our discussions on this. The tax increases are the ones that really have me concerned. The sustaining of the increase of the BPT of 5%, That's a concern to me. I understand, though, that if we do strike that and revert back to the 4%, then other parts of this budget won't be balanced. And so, I would offer that there are other enhancements that you have provided us a analysis of. At least 2 of them here that I'm ready to propose would generate about $18 million. I know that's still not enough to cover the decrease of the BPT from 5 to 4%, but that's my personal position on this. And if we're going to go down that road, then I'm ready to propose those amendments.
I think then maybe that we should go back, and the first thing to decide is Section 2. And if someone would, or you could make a motion to strike that and see whether or not there's support for it, because otherwise I see no way to be able to move forward, and we'll tell if there's still 8 that want to have this section, then there's 8 that want to have this section, and then we know where we're going to go.
Okay, thank you, Mr. Chair. So may I move that at this point? Okay. So, Mr. Chair, I'd like to, on Section 2, to amend the BPT, the business privilege tax rate, from the 5% down to the 4%.
So we just strike the whole section, so we would stay as the statute currently reads.
That's right, because the current law the current increase expires on the September 30th.
Vice Speaker.
Point of order, Mr. Speaker. Could you please set our rules as to how we are going to proceed? Because if we are allowed to just cut taxes without showing where else in the budget we're going to cut, we'll be here forever. We cannot balance this.
No, I understand, but
So
I
if we
think
could
once we know that there's not support for this, or there is support for it.
No, because it has to be balanced with what will be cut in exchange for this. That's what we need to see together. It has to be done together.
Do you have any proposals on how?
Mr. Speaker, I would ask that we get the rules first. How are we going to proceed? Are we going to proceed section by section and get amendments? And do the amendments have to balance or not?
I don't see that it needs to balance. What were your objections to the bill? You voted no, so what were the objections to the bill?
Mr. Speaker, I call for order, point of order. We need to proceed on the bill. We are reconsidering Bill
And so I'm
323,
starting
so
with
we
2.
either go section by section, or
And
we just
that
go haphazard.
In my
order,
math,
or-
2 is the first, one of the first numbers except for the title. Senator Rodriguez. So there's a motion by Senator Rodriguez to strike Section 2. Any senator wish to be heard?
Mr. Speaker, can you just remind us again what the impact of that revenue was? I'm sorry.
About $63 million.
1.6, thank you.
No, 6.3.
6.0, thank you. 6.3, thank you.
6.3. It's more than, because of economic things, we made it 6.3 as opposed to 6.0. So if it's struck, then we're going to have to find $63 million in cuts throughout the rest of the bill. We first have to know whether or not there's support. Then you make some recommendations.
Point of order, Mr. Chairman. There's a lot of discussion going on off the record. If we can get these discussions on the microphone, please.
All right. Do you have a comment that you wish to put on the record, Vice Speaker?
Yes, again, Mr. Speaker, I would just object that if we're going to cut taxes and then we're going to be stuck with a bill that doesn't do anything else but cut taxes, we're not making progress. So, we're all spending our time in here, so I'm just, in the interest of progress, I would just ask that you set that rule in the last round that we went through. It's just,
What
I
we
can't
need-
understand how we're going to have a
What we
bill
need to
that
know
doesn't.
is what the revenue is going to be. We know what all the, what 4% will bring us and what all the other revenue is going to be. All we need to know is, are we going to have another 63? If we don't have another 63, then we can go through the rest of it and figure out what it is. But we need to know whether or not 8 of you, 8, are going to support a 5% increase. And if you're not going to support a 5%, the increase to 5%, then state it up front, because then you're going to have to assist in finding the 63. You can't just shake your head and wash your hands of it. Well, do you support?
Point of order, Mr. Chairman. Discussions continue to be off the record. Let's get these things on the microphone so the public can know what we're talking about.
Thank you. There's a motion. Who wishes to be heard on the motion to reduce the BPT from 5 to 4? Anyone wish to be heard? No? Okay. Is there any objection to reducing the business privilege tax? There is an objection. All those in favor of maintaining, of reducing the, or striking this section and returning to the 4%, please indicate by raising your hand. Turn on your microphone and say whatever you need to say. Motion to reduce to 4% fails. On the tobacco tax in Section 3.
Mr. Speaker, just a point of order. So the sequence now is we're going page by page, section by section. Is that the discussion, or are we?
What I'm trying to do is to try to figure out what revenue we have. I made the mistake of introducing a bill with the revenue in it. We should have had revenue set before we started.
Okay, no, I was asking, Mr. Speaker, because of the tax amnesty provision, and I was going to make some motions, but okay.
I'm sorry, Section 3 is real property. On the real property section, is there any amendment or any move to strike? Senator Estevez.
Mr. Chairman, I'll make the move to strike Section 3.
There's a motion to strike Section 3. The impact would be 9 million, no, 8.2 million. Any senator wish to be heard on Section 2? I mean Section 3, the striking of the real property tax. Any senator? Senator Torres.
Mr. Chairman, was there an analysis done by OFB on the effect? I see there's an analysis that was made on the impact to an increased tax on improvements of $1 million or more, but were there other levels of impact that were analyzed? For example, if you went to $500,000 in improvements on property or $250,000? And the reason that I ask is we know that from what I understand, the value of a house of improvements on a property for a middle-income family is about $250,000, which is affordable housing for middle income. And so, if we were to look at a threshold of who we might agree could withstand an increase,
Yes,
maybe that can be considered as an option.
If we went to 500,000, it would be a 10.2 increase. $10.2 million increase if we went to a 500,000. Okay? And I will note for the record that we received, in communications, you should have the letter from the Chamber of Commerce where they spoke against this increase, where they stated that they were no longer in favor of a real property tax increase because the possibility of the increase of the million would increase the property of the taxes on apartment buildings, which would then affect the poor people. But they had no problem with increasing the property tax for everybody, and are in fact insisting that we increase just the raw land and force the families to do it. So I don't know. The dissonance escapes me. We've been told at many hearings, increase the property tax. We increase one part of it, and all of a sudden, no, because it's going to hurt the poor people. But increase their property tax, and it'll be okay. So there's a motion to strike, or on the table. If anybody else wants to make a different amendment to reduce it or to return it to the real property tax as was initially proposed, there is this real property tax that's available. What is the pleasure of the body? All right. There is a motion to strike the provision in the bill that relates to real property tax on improvements over $1 million. The motion is to strike it. Does any senator wish to be heard? Is there an objection to it being struck? There is a motion. There's an objection to it. So all those in favor of the real property tax on improvements over $1 million, all those in favor, please indicate by raising your hand.
Point of order, all those in favor of striking.
No, I'm sorry. On the motion, all those in favor of striking the motion, the tax levy on improvements over $1 million, please indicate by raising your hand. Motion fails. Section 4 is the tobacco tax. Senator Rodriguez.
Thank you, Mr. Chair. Mr. Chair, I move to strike Section 4.
Any senator wish to be heard on the motion to strike Section 4?
Just so that, Mr. Speaker, if I may, so everyone understands what the projected reduction would be, if you can share the figure.
9.3 million.
Thank you, Mr. Speaker.
And also, Mr. Speaker, this is the exact same tax that we used to fund the labor and delivery ward. So if we scratch this tax, the labor and delivery ward will no longer be funded.
Thank you.
I'm sorry, just on that statement, a point of information, Mr. Speaker, there's already a mechanism in law, and unfortunately it hasn't been carried out or effectively implemented, but there's a provision that otherwise would have allotted $600,000 specifically for GMH to be able to work with GITA and procure the necessary funds to be able to construct that. So that mechanism, if in fact the $600,000 is restored, that mechanism will still be in place. Thank you, Mr. Speaker.
The repayment provision of $600,000 is still in the bill, or can be placed back into the bill if this is struck, but the full payment up front would not be possible at this point. It would have to take out a bond or a loan, as was being contemplated for the last 4 years. So there's a motion to strike Section 4. All those in favor, who wishes to be heard? Senator Lee, or you object?
Yes, thank you, Mr. Speaker. I voted in favor of the increase in the previous bill, and I just wanted to go on record as a point of information, I guess, for the body, that Guam still has 27% of the people on this island are smokers. And I was looking at some figures yesterday that actually detail the public policies put out by this body and previous legislatures as well. And it shows that with every single increase, they have the local data that proves that youth smoking prevalence and tobacco control laws are correlated. With these increases in tobacco taxes, it's proven less and less of our children are initiating, less and less of our children are becoming addicted to tobacco. And another really startling fact that I heard as these people are looking at our local data, this is data all collected from right here on Guam, is now they are realizing they need to target children in the 3rd grade. 3rd graders. That's what we're targeting for initiation. The first time they light up is as early as 3rd grade, perhaps even earlier. And as a mother of young children, I cannot stand by while this is happening to our kids. And so everything that we are able to do in this body to prevent those things from happening to our children, I think we should absolutely do that. Sidusmasi, Mr. Speaker.
Thank you very much. Any other senator wish to be heard? Any other senator wish to be heard? Senator Nicholas.
Thank you, Mr. Chairman. I agree with the retiring speaker. I think it's a matter of style as opposed to outcome. A third grader doesn't buy cigarettes. I mean, they don't pay taxes. So raising the tax really wouldn't stop a third grader from being able to get the cigarette. I think the biggest problem that we have is a lack of tracking of product, which has been made very plain with the 4.9 million packs, 98 million cigarettes that obviously we're able to get out of a bonded warehouse over the last 3 years. These cigarettes need to get stamped, Mr. Chairman. And once we get them stamped, we can get them tracked. And if a teacher finds a pack of cigarettes on a child and they have the stamp, they can track it all the way back to where it was sold. They can pull the camera footage and they can figure out who bought that pack for that child. We have an opportunity with these stamps to not only track the cigarettes and figure out exactly how much is hitting the marketplace, but in so determining that, be able to go back and reassess taxes for whatever was underreported. And it's those two aims, Mr. Chairman, that I I want us to focus on. It's the reason why I don't want to increase the tax at this time, because increasing the tax this time will make it more difficult to be able to go back and factor out the sales to be able to determine how much was actually not getting taxed over these past years. I do want to support making sure that we're not going to have these products getting into the hands of our children, and I think the best way to do that is to get that stamp up and running. I'm definitely going to be asking the Director of Revenue and Taxation when he gets here tonight, what's up with that? Because that's a mandate that's been in place since January, and they're still not doing it. But all that being said, Mr. Chairman, raising this tax isn't going to track the product. It's going to actually make it more difficult to go back and figure out how much product wasn't being accounted for. And that's something that I'm a little concerned of. I want us to be able to go back and assess what could amount to tens of millions of dollars. If it was 14 million over 3 years, and the tobacco tax went up in 2008, that means that we have another 15 years. That's 5 times 14 million. That's $60 million from one manufacturer if we're able to get the hard data in to show that that was a consistent trend. And the other distributors might be able to reveal certain gaping holes as well. So it's for that reason, Mr. Chairman, that I'm not going to support the tax increase at this time, only because I want to make sure that the stamps aren't going to get adversely impacted in terms of the ability for us to track the sales and be able to go back and assess the lost revenue. Thank you, Mr. Chairman.
Thank you, Senator. Senator Ruggan?
Thank you very much, Mr. Speaker. Mr. Speaker, you know, I think it caught some people in the community by surprise by virtue of my initial support of this tax. And I can share this with you, Mr. Speaker. About 2 days prior to entertaining this particular provision, a very close friend of mine had passed away as a result of tobacco influence. And that obviously elevated my concern with regards to whether in fact this government is doing enough to apply the funds appropriately for the cessation programs in our schools. One of our colleagues mentioned about children even as young as the 3rd grade having used tobacco. That tells me that we still need to do more in reaching out to our children in the elementary school and in the middle school, in our high school, because that's really where, Mr. Speaker, the resources should be targeted. And, you know, I supported this particular provision initially in spite of understanding that we need to do everything we possibly can to make sure that these funds are getting to where they're supposed to go. And with some of the comments that have been made previously about the rating of special funds, I did not necessarily have the trust whether in fact the Healthy Future Funds was actually being applied and used in all the different sections, whether it's public health, whether it's GMH, whether it's University of Guam, the Cancer Registry. But it really comes down, Mr. Speaker, to if this provision saves one life, then it would have been worth the decision that I made. If it saved one life. But can you imagine if these proceeds are applied to where they should be and it saves multitude of lives? It could be a family member. It could be our neighbor. It could be our best friend. Mr. Speaker, you've always been a very strong advocate for making sure that programs are in place for tobacco cessation to prevent the use of tobacco and also to discourage and to assist individuals out there in stopping. And if this measure is going to move in that direction and prevent or save one life or prevent a 3rd grade student by virtue of the investment of some of these funds in these programs from actually lighting up a cigarette or using tobacco, then it would be worth that particular investment. Thank you very much, Mr. Speaker.
Thank you, Senator. Any other senator wish to be heard? Any other senator wish to be heard? There's a motion to strike with an objection. All right, so we need to take a vote on those, all those in favor of striking the tobacco tax as is currently stated in Section 4. All those in favor of striking the tax, please indicate by raising your hand. Motion fails. Well, colleagues, we've gone through 3 sections. We've, by at least 8 votes in each of the 3 sections, kept the revenue. So the revenue, as is set forth in Section 5, is intact. Does anybody wish to speak on Section 5? Senator Argan. Well, no, we're on the Section 5, the estimated revenue for. Yeah, because of the fact that all 3 taxes survived, the revenue is still there. Section 6 is the priority of the payment of taxes. Any objection to that section? Yes.
Point of information, Mr. Chair. With all due respect, under Section 5, all the revenues are intact. However, we have not addressed, those are the revenue enhancement measures, and so technically you're correct. However, included within this revenue section is a supplemental appropriations revenue, which was an issue of contention by several of our colleagues here. So those, I believe, those colleagues of ours who were concerned about this supplemental appropriations revenue fund perhaps should speak to it. And that would be on page 7, line number 5. Because if there was a concern about that being in place, then those who are against it should probably make the motion to delete.
I stand corrected, and I thank you very much, Senator, for pointing that out. There is a U on line 4 on page 7.
Mr. Speaker?
Yes,
If
Senator.
I may suggest, with all due respect to the previous speaker, because the representative from Revenue Tax will be joining us at 7 p.m. to be able to explain the $73 million of collectible outstanding tax receivables, if I can suggest that we come back and revisit this after the discussion and the presentation, if it's okay with the previous speaker.
All right. Well,
And Mr. Speaker, just to advise you, not only Mr. Camacho is coming and Mr. Burns, but also Mr. Carlson. They're en route right now.
all right. They're in the lobby? En route. All right. Why don't we then take a short recess? And when they come in, we will reconvene, because otherwise there'll be questions anyway. Thank you. Yes, please. The Committee of the Whole is back in order. At the request of some of the colleagues earlier this afternoon, we have a few directors here with us, and I want to thank them for coming down. At the very far end is Director Camacho from Rev and Tax, Director Byrne from Department of Administration, and Deputy Director Lester Carlson from BBMR. And the purpose of having them here is to have any and all of you please ask the questions that you need answered. I know last night we unfortunately were unable to break in time to hear Mr. Camacho. So if there are questions that any of you want to ask of him, and I know there was some issue, some people have direct numbers to Mr. Byrne. I'm going to have to ask for that later on, so I know how to be able to call him at 7 o'clock in the evening for an answer on some things. And so if you have any questions that any of you want to pose, please, the floor is yours. We'll start with Senator Franken.
Thank you very much, Mr. Speaker, and good evening, gentlemen. Thank you for joining us this evening. Only because we're at the Supplemental Appropriations Revenue Fund component, and when the presentation was provided a few days back, where in fact Mr. Camacho, as the Director of Rev and Tax, questions were asked about the outstanding tax receivables. And you gave us a number of approximately $190 million, and then you started to identify and categorize a number of them, and you came to a figure of $73 million of so-called collectible tax receivables. Now, based on that, and based on what this body has done, has provided you with the authorization and the appropriation to acquire additional personnel within Rev and Tax, and you've been successful in that. You provided numbers at the last discussion in terms of additional collection agents and also additional personnel in other areas within Rev and Tax. Now, to think that $73 million categorized as collectible, that 25% of those revenues, even though they're defined as collectible, would not be collected based on the budget proposal to allocate those additional collections to a special fund called the Supplemental Appropriations Reserve Fund, and to specifically require that those funds be appropriated and used for different Government of Guam services as well as functions. So can we just get an understanding as to your perception, and also the governor has come out vehemently about opposing the SAR fund, when in fact, like I shared with you a little earlier, much of the discussion is recognizing that these funds are, these outstanding tax receivables are collectible. So perhaps if you can start off, Mr. Speaker, if you can start off by sharing with us some of the information that he imparted to the Chair of Rev and Tax, and then we can start discussing about the specifics about whether in fact these $73 million is actually collectible, because they haven't been collected to date, so they would be considered collectible into the next FY. Even if you collect, aside from the tax amnesty, even if you collect 10 million of that 73 million, you would still have a balance of $63 million in that collectible category being carried over to fiscal year 19 for collection purposes. So that's why I'm somewhat, I guess I need to understand, get a better understanding as to why those are viewed as possibly not falling into a supplemental appropriations reserve fund by virtue of some of the discussions we've had before. So, Mr. Speaker, if I can ask Mr. Camacho to please respond.
Mr. Speaker, before he presents that, he does have a PowerPoint that he can probably explain it all and everybody can follow along with it. He does have a PowerPoint presentation that's available. for all the colleagues to see, and then they can pretty much, he can explain all the different taxes and how it generates and how it's collected. And I prefer we go that route because that's the handout I gave all the colleagues last night.
All right, fine.
Just tell them next, Mr. Camacho, and they'll roll.
Okay. Next slide, please. I guess, just to begin with, what constitutes the Department of Revenue and Taxation? Basically, these are the different divisions within the department. We got the Administration Division, Tax Enforcement Division, Tax Service Division, and then we also have our Technical Research and Appeals Bureau Division. We got the Real Property Tax Division, and our Motor Vehicle Division, and the Regulatory Division. Each division has its own branches, and I think one of the things that we want to look at within this presentation is really the tax side, which is the enforcement side and the service side. So next slide, please. Every year, we basically collect returns, people file returns, and basically, if you look at the numbers from 2013 to 2017, we've actually processed all these returns every year. And 1040s, 1041s, 1065, 1120, and the total. So every year we actually process all these returns, and then after that we actually segregate what's refund, what's basically taxes that are assessed and goes into the receivable. If you have any questions, maybe you can ask it at the end of the presentation. Next slide, please. And you probably notice this very familiar. These are all the taxes that we paid every year by fiscal year from 14 to 2018. We haven't updated the 18 yet. So we normally refund about 54,000 returns every year with roughly about 144 million a year on refunds based on tax year.
Mr. Speaker, if you can just highlight the $144 million in 27 just as an example, because that's inclusive of the child tax credit, correct?
Yes.
Yeah.
Everything.
So can you give a breakdown of that? Because right now our budget shows $125 million set aside for tax refunds, and it doesn't reflect the amount for the additional child tax credit. So I just want to make sure that as you present this number to our people, that they understand exactly why is it that the legislature is only appropriating 125 when it's 144 that they paid last year. Please. Thank you, Mr. Speaker.
Again, this is based on fiscal year, but normally the process for income tax refunds, normally we pay the total gross every year. And every quarter, we accumulate all the additional child tax credit, and every quarter we make a claim. So every quarter we get reimbursed. I believe it's roughly about 18 to 20 million a year that we get reimbursed for refunds on additional child tax credit. Senator Torres?
Mr. Camacho, if just looking at the slide prior to that on the number of income tax returns filed, there is a downward number trend from 2015 to 2016. If you look at all 1040s, 1041s, 1065s, 1120s, and yet on the following slide, the amount though of refunds paid, although there's a downward number of
again
files tax.
I think I can explain that. The one in income tax returns filed is based on tax years. In other words, even though they were filed, let's say for a tax year of 14, it's due 15. Even if the tax year 2014 is due 15, some filed in 16, some filed in 17, some filed in 18. So we gather all those information. So to get a good picture of how many actual returns are filed based on tax year, this is what it really says. On the other side, we refund no matter what basically years are filed in a particular fiscal year. But majority will be the main year will be, for example, if we're refunding refunds in 17, main refunds will be 2016. But aside from that, we do refund other years other than 2016.
So we wouldn't expect that if there was a decrease in the number of files, returns filed, there should be a corresponding decrease in the amounts of tax refunds. And that's because the timing of the tax refund you're saying is not consistent with the filing, that it can be paid at later times. It's just if you're looking at trends, you would expect that a decrease in one would result in a decrease in the other. A decrease in number results in a decrease in payment and tax refunds, and yet the amount of tax refunds is consistent, notwithstanding the number of returns filed. From year to year, it's consistent, yet the amount of returns filed is lower. I just noticed that, and I just want to point that out.
Well, let me just talk about refunds. Normally, refunds, if you have the same number of taxpayers in 1 year and the following year, normally because EITC goes up, you know, the refund amount for EITC goes up. Sometimes you see that there's an increase in the refunds from the subsequent years because there's more refunds that are paid for EITC. So it varies, in other words.
Okay, I'm satisfied because I'm actually seeing that that is the case, for example, in 2015. All right, thank you very much.
Next slide. Okay, part of the enforcement and revenue and tax really consists of the examination branch, and we put the data together basically on, you know, how much really examination branches are really producing by going out actually and auditing returns. And Senator Bisco, you asked for how many corporations were audited last. If you look at 2017, we have about 113 on corporations and 1,751 on individuals that were closed in fiscal year 2017. So these are the numbers. I mean, these are additional revenues that we actually go out and produce by auditing taxpayers. If you look at the last 3 years, we're looking at, you know, 49 million deficiencies. Deficiency is defined of an increase in tax. So normally these big deficiencies normally don't get paid right away. If it gets contested, it goes to court. So that's part of the receivable that we talk about. I think about $20-some million or 29 million. It's caught up in court, and some of them are paid. But if they're not paid, then again, you know, we go through the process. So this is what constitutes part of the receivables that we're looking at moving forward. Next slide, please. And the criminal investigation branch, which is another enforcement division, basically, if you look at the numbers, you know, ever since back in 2013, you know, we referred so far, if you look at the second to the last, we referred at least 5 cases to the AG's office, and recently we submitted one again for this fiscal year. So we're really looking at a lot of these on the criminal aspect that we're going out there, just to make sure the previous file is mainly, it's really civil cases, and these are the criminal cases.
Mr. Camacho, right now you're showing, I'm sorry, I'm referring back to the previous page, you're showing tax auditors, so they obviously take a look at the information and they audit the numbers and make sure that they are appropriately assessed. You have junior agents and senior agents. I was told about 2 weeks ago that also one of the challenges that Revenue Tax has is the level of support that they presently have for tax assessment processors, the individuals that actually input the information into the computerized system. Mm-hmm. Because obviously if some of the tax returns are provided in written format, in documentation, then you have your tax assessment processors who have to go before the computer and actually input that information, and then it's forwarded to the appropriate personnel for review. Now, how many individuals do you have in that case? Because what was shared with me couple weeks back was that the challenge that revenue tax sometimes experiences is that when the tax assessment is actually, the information is actually inputted into the computer, that it takes that much time, even in excess to a year and a half, 2 years, only because of the need for additional personnel. So can you just address that, please?
Basically, our priority is to make sure that taxes are all assessed. And as you know, for refunds, it's basically first in, first out. But it is our main priority that if a taxpayer files a return and owes taxes, those returns are isolated and quickly assessed, in other words. So they may be talking about refunds, returns on assessment, but if a taxpayer, whether it's BPT or corporations or individual, we basically isolate those returns and we make sure that those are quickly assessed and billed if they're not paid. So, you know, that's our priority. But when it comes to refund, there's a lot of returns. Like I mentioned earlier, there's 54,000 refund returns generally that will be paid every year. So I see, yeah, we can be behind a little bit, but as far as taxes, collection of taxes, those are isolated and are priority for us to actually go after.
Then would it be a helpful tool if in fact you were given the opportunity to hire seasonal personnel? Let's say, for example, and the reason I ask this is because in the taxpayer service component, refunds paid by fiscal year, you're showing that in fact the quantity right now that has been processed is 20.7 versus last year, 2017, was in the neighborhood of 54.2. So what I'm seeing here, unless you can correct me, is that your people are doing an excellent job because obviously interest paid is $417 or $417,000, whatever that amount is.
Which
But
one are
then
you looking at, Senator?
the taxpayer service continued. I'm looking at your 2018 versus your 2017 number, and based on the quantity, so far what has been processed is about 20,000 taxpayers.
That's,
when traditionally
yeah,
reaches,
these are all, again, these are all returns that are actually being processed. So if we don't process the return, it doesn't get into the picture.
No,
so,
I understand. So you've already processed 20,000, right?
Yes.
Out of a possible 54,000 tax returns.
Yes.
So what I'm asking is, would it be helpful if you were given the flexibility and the authorization to hire seasonal personnel? So after a couple of weeks before April 15, you bring in a full contingent of personnel, and then, but they're only going to be around for like 5 or 6 months to help you process all the tax documents that have been filed.
Yes, that would be good.
That would be helpful.
Yeah, very helpful,
okay.
Yes.
Thank you, Mr. Camacho.
So we're at the criminal investigation branch. So we go to the next slide. And so looking at all these returns that we process, and for all those taxpayers that actually, I guess one more slide. Next slide, please. We're now into the accounts receivable that we talked last time, basically. Let me just explain what we have here. On our accounts receivable, we have about $193 million. Of that, we have some receivables that are processed but not actually referred to collection branch for further pursuant of those collections. So we come down to about $186 million that is in collection. But remember last time I told you there's about $57 million that were actually special review and reconciliation that we're looking at right now. And I think I mentioned that about 44 of that is a reconciliation of the withholding taxes that we're looking at. So to put that aside, you know, we come down with really $128 million that we're really actually looking at right now. And just to either further break it down, we basically have those special tax classes of receivable, which basically involves bankruptcy, litigation, offer compromise, and payment plan arrangement. So those are the ones that we put aside, and we have some, about 1.2 that are actually being submitted or referred to collection branch, which comes down to about $73 million of receivable that we're looking at right now. But again, it's not to say that we're not collecting from the special tax classes, because we do collect from those offer and compromise, and also on payment plans or payment arrangement plan. We do collect from that, but those are already set aside. So we got this $73 million, and if I can just go to the next slide, and I'll explain about the $73 million. So what we're actually doing when our collection branch receive all these receivables, the first thing they do is they look at full compliance, look at these taxpayers. They make sure that the assessment is verified and it hasn't been paid recently. And then they start to try to communicate with the taxpayer. So that's the first stage. Then, if they can't communicate with the taxpayer on the first page, then a letter which is called 1058 Final Notice and Demand for Payment, with the intent to levy and the right of hearing. In other words, every taxpayer has a right of hearing. So basically, at that stage, you got $9 million also that's in that stage. Now, the most critical part is basically when we send that letter, final notice, they have about 30 to 45 days, I believe, to act on that letter, or else we're going to start going out and start levying, issuing warrant. Levy is if it's income tax. If it's warrant, we issue warrant to the Superior Court to collect local taxes, and then liens will be filed. So basically, that's the biggest part that we're looking right now, and eventually these can turn into other special classes based on the special class where the payment plan or for compromise. And if it's not litigated, because if it's litigated, it goes already into the litigation and bankruptcy file. So those are the critical. And also at the end, there's going to be some people that disappear. We need to try and catch them and see. So if we can't find them, we try to locate their employer, try to ways of means of trying to get them. And we did so many efforts. Then we just placed them on the side for like inactive for a while. And placing them in inactive basically is still effective, because for many years, if we put them in an inactive file, and let's say the taxpayer disappear for a few years, goes to the States, come back, and files a return again. So many times they didn't get the refund because automatically the offset would always work. When you owe taxes and you're getting a refund, it automatically offsets. In other words, that's even if you have a payment plan, it offsets. In other words, it's built in already. So these are the things that we're doing on the $73 million. So if there's no questions, I can go to the others.
Can you break this down just a little more? I understand that this 654 are unlocatable, and so that probably are lost. Well, not as easily.
Not necessarily lost, because the statute of limitation for collection is 10 years.
Of this 73, which one of the top three categories would you say you could possibly collect next year? Is there a group here that's more readily available to make the payment? Well, again, of any of these, which one's more? Which one do you think you could possibly have?
Mr. Speaker, may I weigh in on this? Because I don't think it's really a matter of the category. Each year, these
Point
receivables
of order,
are collected.
Mr. Speaker. Is this a DRT question or a DOA question? Because the last time I checked, DRT is the one that collects the taxes.
Yes, we're trying to get the answer, okay? So that everybody has an understanding and we don't have to bring them back?
But I didn't know that DOA is part of the collection of taxes.
Let's just get whatever answer we can get from anybody, and so we can just end the evening.
Each year,
No.
each year, some part of receivables are collected, and whatever is collected out of receivables is recognized as income tax revenue in that year. So when we're looking at the estimates for revenue from tax, it includes collections from these receivables. And I think that's a point that maybe got missed, that I really wanted to make sure everybody understood.
That when they come and they pay Department of Administration, it's for 18, and it might have been for 15 that they're paying the back taxes.
Yes, exactly.
What my question is of these three categories, which one would you most expect that is going to be paid in this upcoming year? Which is probably, do you think, would be more readily available for payment of the set? We know that the last one isn't going to be until they come back to Guam or relocate them.
Again, you know, receivables, a revolving account, they come in and out. I think when we go to the next slide, you're going to take a look at the numbers when we look at aging, and you're going to realize that those numbers are really spread out based on how old these receivables are. If we want to just go back to the next slide and come back to this slide again, if you look at the aging, go to the aging receivables, you can really look at it by saying between day 1 to 1 year, we have a receivable that are 38 million. From a little bit over a year or more to 2 years, you have that 27. You know, you go down the line. From 2 to 3, you got 36. And then 3 to 4, you got 9 million. I want to just comment on that 4 to 5. The reason why it's large is that's basically the one that I was talking about earlier, that we're reconciling some, you know, special that we're looking at reducing. So if you really look at that, you can see the spread out on those receivables.
I see that, but that goes back to the 194, and I'm trying to stay back on the 73, and even more than just the 73, I'm trying to get from you, how much do you think is reasonably expected to be collected in the next year? I mean, with all the efforts that you're doing in level 1 and level 2.
I mean, obviously, when we look at receivables, we're maintaining $128 million of receivables. Obviously, receivables come in, they get paid, come in, they get paid. We did an analysis basically for this fiscal year, and I think we were averaging at least collecting receivables roughly about $3.1 million or $3.2 million a month. So we do collect receivables, but when you collect receivables, it also depends on how you look at it. Some of them are in the form of cash, some of them in the form of transfers, some of them, a lot of them are in the form of offsets. So basically, you can say that, you know, on a receivable, you can say that taxpayer, you know, is getting a refund of $5,000, but he owes $6,000 offset, but, you know, it's just a transfer from one to the other. So those are the things that we look at. But when we add those up, I believe we were looking at an average of $3 to $2 million of receivables that we collect, you know, on a monthly basis.
And of this 73, how many of them are the same taxpayers that you listed in the amnesty page?
I don't know, and I can't speak of this. We're working on the 73. I can speak on all the others, but the 73 are receivables that we're working right now. In other words, it's in the process. There's a lot of levies, a lot of warrants that are going out. So those are the active receivables right now that we're
And the amnesty, the number of people that you had in the amnesty program, the 2,400 that you have there, how many of those are some of these taxpayers that are in Category 1 and Category 2?
I remember that we're looking at the numbers. I believe, percentage-wise, I believe 42% of that declared receivables. I mean, of that 33 million declared receivables, I believe 42% is receivables, and 58 represents delinquent non-filers. There's a lot of non-filers that came in.
In the amnesty group?
In the amnesty, yes.
Oh, so they're not even in this?
Yes, they're not even in this.
Yeah, these were people that we didn't even realize had owed taxes, and they just came in and before they were even caught. But you don't have a. You had a question? No, you can ask it because I think that that was probably a good question when you were.
Can you just explain what delinquent non-filers are? And I must have missed it. And we are not accounting for them in the amnesty, or are we?
Well, you know, when we offered the amnesty, we offered.
What is delinquent non-filing first?
Delinquent
Non-filer?
non-filer?
Yeah.
Meaning the amnesty calls for any tax period for 16 and prior years. So it's an amnesty period where taxpayers basically come in and say, okay, you're giving me an amnesty, I'm going to come in and I pay your tax, and you get, if I pay it in full. But before we close that amnesty, every single applicant will have a full compliance check. In other words, they want to make sure that you're in other words, you're covered. In other words, you're declaring all your taxes. So once that full compliance and all those taxes are paid in full, the trade-off basically is that we waive the penalty and interest. Likewise with receivables.
Is that what you did with that $14 million lien that
when my staff told me, I asked them basically to run a tabulation of what consists receivables and what consists. So they looked at it and they came up with that percentage of 14 on the receivable, and I believe 18 on the non-filers. That's draft report, please. This is the draft report.
Going back to this page with the active status accounts, do you have those you don't have this broken down by individuals? How much of this is individuals, how much are corporations, and how much is withholding, do you?
That one, yes. I wrote it down. On the 194, on the aging, individual is 43.6, corporation is 13.8, BPT is 77.3, and withholding is 60 million. Individual is 43.6, corporation is 13.8, BPT is 77.3, and withholding is 60 million. I just want to say that the BPT and withholding is high because a lot of those BPT are in court. And also withholding is, I mentioned earlier again, we're doing the reconciliation on the withholding. So that's why it's high. So at the end, when we clear that $57 million, those things will go down.
What is your BPT again? I'm sorry. Your BPT figure?
BPT is 77.3.
Okay.
And then what was after BPT?
Withholding tax?
At what?
60.
So, but for the 9,373,000 and the 9,330,000, you don't have those broken down as to how much is individual withholding.
I don't have the numbers, but I think we can do that. I don't have the numbers.
Senator Lee had a question.
Mrs. Masi, gentlemen, and thank you, Mr. Chair. Mr. Camacho, am I understanding you to say that monthly collections for the prior years were about $2 to $3 million a month, or about $24 million on the low end a year?
Well, depending on the year, I mean, like this year we're tracking at least, I think, 3 million, 3 or 3.2 million monthly.
3.2 million a month? Okay.
Yeah, 3, but it's only 9 months. So we don't know what the collection for, it's up to June, so we didn't look into July, August yet. So this is for 9 months.
Understood. Okay, thank you very much.
Franken.
Mr. Camacho, I don't know if you responded to the speaker's question with regards to the $53 million outstanding. Of that, how much can you anticipate actively collecting over the course of the next fiscal year?
I cannot project, but I can project what's being collected right now. I believe, like I said, we're tracking for the 9 months. We're looking at collection of 3 to 3.2 million monthly. So, and again, it really depends because, when I was looking at that category, we can be collecting right now 25, 28 million, but what is really on cash is important because a lot of offsets are happening in between. If you go back to your refund report in the beginning, you can see what's really happening there on the slide. If you can go back to the refund. I think on where it says refunds paid by fiscal year. Look at all the offsets that are happening.
But then, Mr. Camacho, I mean, just looking at offsets and you applied the percentage, $4.3 million offset from a $65.98 million.
Let's say we collect on the receivables 28 million, and depending on what fiscal year. Right now we're looking at 4, but in the previous years you got 8.9, in 16 you got 11.4, and then 15 you got 18.3. So these are receivables that are being offset because taxpayers actually owe. So when they're getting their refund, or whether it's a corporation or individual, they won't get it. It'll offset that receivable.
No, I understand, but even if you look at 2017, that's 54,000 filers. And then 2016, 57,000 filers versus 2018. Right now, on your processing is 20,000. So just looking at the 4.3, and you double that, it would be equivalent to 2017 versus 4.3 out of 65.9 million. So I understand about the offset. I mean, even if you apply a 5 percentage point of the total amount, original refund, then, and you consider that as an offset, or you take the last 3 or 4 years and use that percentage, then I think it's within reason that would be your possible offset for this upcoming collection year, or this collection year. So, I mean, I'm just looking again, if you're looking at collecting above and beyond $3 million to $3.4 million every month, and, credit goes to your people. And now that you have those additional personnel that you have just brought on within the last 3 months, I'm anticipating that the process would also continue to at least sustain that level of collections of prior year accounts receivables, or increase it even more, just slightly. So I'm looking at that. I'm trying to look at the entire equation. And one of the considerations in this budget was a discussion by the Vice Speaker to provide a tax attorney, to give you that option so that you already have your personnel. If you're able to acquire a tax attorney almost on a full-time basis, then that's 2 parts of the requirement for revenue tax, and then it comes back again to automation, because that I consider as a big part, because some of your, what did you categorize them as those who have not filed but are delinquent filers that never filed. and then eventually came...
Non-filers, delinquent non-filers, yes.
So $18 million worth.
That's what I was told, yes. And it's a draft. So again, you know, as far as there is a law passed back in, I don't know, during Camacho's time, I believe, where there's a law that allows us to hire our own tax attorney, but from my understanding, and we're trying to get one out soon again, an RFP or RFI to actually, there's nobody interested. I mean, we even posted in the IRS, we work with our IRS to try to convince these people to come and work for us. But we'll try our best. We continue to you know, try to get somebody to come in. I know in those days we had two, but they're basically from the AG's office.
And I appreciate the effort. I mean, if in fact you're aggressively trying to hire an attorney. Can I just go back, Mr. Speaker, just to that aggressive collection action, 53.7 million accounts receivables, Category 3 active status accounts. I find it interesting that we have over 12,502 either individuals or businesses who have not complied with meeting their tax obligation, at least in this active collection, aggressive collection category.
Yes, and those are basically, again, a lot of them are levies, a lot of them are warrants, and basically, you know, at this stage of time, we are communicating with the AG's office, referring a lot of these accounts to because there's a particular section in the local law that allows us to do an injunction, basically asking the AG's office to assist us on filing injunctions with these taxpayers that don't want to come in at all. They're basically, if they're in business, we can stop them and force them to come in and make some kind of or work with us at least for any kind of agreement or any payment plan.
So what's your time response on that? Let's say,
I
for
think
example,
our staff are still communicating. We're just, you know, there's a lot of communication going on. Right now, since the amnesty has gotten into place, we're very busy. If you see all those accounts that are coming in, doing the full compliance for every taxpayer that comes in and apply, we have to make sure that when we sign that amnesty at the end, that they are truly in full compliance, because we don't want to try and basically say that a person comes in and say, I owe you, or I owe you for 2 years, but there's maybe 1 or 2 or 3 extra years that are missing. Yeah. So we're finding that out also at the same time.
Thank you, Mr. Camacho. Thank you, Mr. Speaker.
Senator Espadon.
Thank you, Mr. Chair. Mr. Camacho, just on that one issue of the aggressive tax collection, they were asking about that 53 million that's still out there. Just a question on that point, though. That's not a 1-year total. That's an accumulation of taxes that have been owed over time. Is that correct?
Yes, and these are probably some of the earlier years that are coming in.
Okay, yeah, no, in fact, if we take a look, I guess, at your aging summary on the following page, a lot of that is probably included in the later years. Is that a fair statement to make? I mean, I know that in the 3 to 4 year aging, the 4 to 5 year aging, there's 50 million, 5 to 6, there's another 9 million, 6 to 7, another 60 million. So, bottom line, that 53 million on the aggressive collection of action basically is an accumulation of taxes that are owed over time.
Yes.
Okay,
yes.
Good enough. And my question really is for you, Mr. Byrne, and that is that when a tax is paid that's owed from previous years, once you receive it, what happens to that? I mean, do you basically try to make payment on past accounts that the government owes and book it that way? And excuse me for my limited knowledge on how this all works, Mr. Burns. So if a tax payment is made from previous years, how is that money used? In other words, say, for example, we collected in 2018, but that tax was from like 2016 or 2015, and if there were some payables from back in 2015, 2016, is the money that's collected today in 2018 used to close some of those accounts that we had back then?
Not really, Senator.
Okay.
I mean, first of all,
how does this work?
we really wouldn't want to have payables from that far back. I mean, people would be chasing us if we did that, just like revenue taxes chasing the delinquent taxpayer in this case. We recognize that as a tax collection, as part of the tax revenues for the year.
Okay, but if we ran a deficit, say for example in a previous year, right, does that kind of go, or do we just carry that deficit forever?
Yes, I think I said a couple of weeks ago that, all in each of the years that certainly I've looked at, tax collections have fallen short of the budget assumption.
Right. So just to be clear, and again, excuse me for my limited understanding, right? And so you're just saying that in spite of it all, in spite of what the shortfall may have been in previous years, any collections that are made this year stays this year in 2018 for now.
Yes, we recognize it as this year's revenue.
And then as revenue, where does it go? Or is it if it's not been appropriated, what happens to that money?
Well, effectively, it should have been appropriated because even though it's a collection, it's an addition to this year, there will have been shortfalls under current year's collections. And if you look at the audited statements and that schedule that shows actual against the budget for the general fund, there has been each year a shortfall.
Okay.
So really there isn't an excess of appropriations to appropriate.
Okay. So it's used basically, and just to be clear, it's used to make up any shortfalls that we have from the projections to be able to be applied to this year's appropriations.
Yes, otherwise this year's shortfall
will be
would
short
have been
also.
bigger. Yes.
Okay. And so as a result, taking a look at this year of 2018 and knowing what we're collecting, we anticipate a shortfall in 2018, fiscal year 2018.
Well, of course, 2018 has been particularly difficult because we had this huge shortfall, this cascading shortfall.
Right. So far, any of the monies that are being collected right now are being used to make up for the possible shortfalls or the obvious shortfalls that we're going to experience in this year.
Yes.
Okay. Thank you.
Senator Lee, Senator Estevez, then Senator Torres.
Thank you, Mr. Speaker. Just one quick question. Mr. Camacho, based on historical collections, can you give us an idea? Can you break it down into the different categories? So corporate, individual, and withholding? Like how much? I ask this question just because I'm not sure if OFB used your collections data in our revenue estimates. So I'm thinking we could potentially, our numbers could potentially be adjusted upwards based on this 24 million in anticipated collections. So if you could break it down between those three categories.
I don't have that number, Senator, but I can get it to you. The numbers. I'm pretty sure there's numbers for each category,
Right.
but I just don't have that number right now. But if you're saying we collect $24 million, there's certain portion for every taxes that we collect, but I don't have the numbers
Understood.
right now.
Okay, absolutely.
I
just think it would.
I can get it to you soon. I can.
Okay,
but
I just think it
I
would
need a
better
report.
inform us and
Okay.
help our revenues to be a lot more accurate. Thank you.
Thank you, Mr. Chairman. I was just listening, and it was interesting information that revenue generation from previous tax years is being rolled in and being accounted for as income based on this year. And I think in many ways that lends to more credibility to the SAR. Now, understanding that, I do understand there is the potential for a shortfall based on the budgeting process, but as far as I understand, when we budget revenue projections, it's based on the current tax year. So when we budgeted for so when we budgeted for 2018, we were budgeting based on 2018 revenue streams, which I understand, there's a variation. But I don't believe that it should be able to work both ways, because if there's a shortfall income from previous tax years that's used as revenue I don't think that's accurate, because then if that's the case, if you're able to book it as current revenue, then the legislature should be able to appropriate it as projected revenue. And so the logic's not matching up, because the entire budget process is based off of projections for the upcoming fiscal year, and that really throws it off in terms of determining what is the prior year, which should, for all intensive purposes, get booked into the SAR pending appropriation. And if there's a shortfall that needs to be adjusted, then that's where we can do that in the budget process or make the adjustment. Now, I guess my follow-up question to be DOA or BBMR, what is the shortfall we're seeing total in terms of tracking and projections for closing out 2018?
Thank you, Senator Esteves. I don't have the latest CRER, and it is the 10th. So in about 10 days, we'll have updated that number to be able to provide to the body and the public what it is that we project the shortfall.
How about based off the last CRER?
Yes. But if I can, I'd like to be able to...
We'll get to the explanation, just, so we stay consistent with the train of thought. I'll allow you the I'll give you the opportunity, but if we can just look, because what I'm understanding and I want to make sure of is that if the justification is to be using revenue that wasn't projected in the budget process, that was signed into law for obligations that was appropriated based on revenue projections for 2018, that's kind of the train of thought I want to try to understand right now, and I'm trying to figure out kind of an average of what this shortfall should be.
Yeah. So if I may, for 2018, due to the efforts of this body in being able to recognize the shortfall in revenue and the commensurate reduction in expenses, we have effectively mitigated that. So we were tracking, I believe at one CRER 5%, 6% below, which when you're hitting 3%, it triggers a fiscal realignment plan. So we mitigated that because of the fact that we were collectively able to take 10% cuts in the legislature, 10% cuts at the governor's office, and then reduce expenditures allotments for the agencies, including the autonomous agencies. So this body has done a great job in being able to recognize and react to what has transpired. So I think, if you will allow me, the speaker did take that as a segue into the 19 budget, that given what we're doing now and the continuation of austerity measures and the need to kind of bridge a little bit of the gap that still remains, we're not that far off if we continue what we're doing.
I understand that. Now, and that's where now I'm glad you were able to reiterate that based on your, because that's what I had assumed based on what this body had passed. So we had a 5% BPT sunset, and then we had the 30 million that was supposed to be reduced based on the honor system by the government, and in large part that should have made us whole in 2018, correct? So what I'm wondering is why I'm hearing from DOA that there's a shortfall facilitating the need to use unappropriated, non-projected revenue in 2018.
No, Senator, I didn't quite say that. What I said was that historically tax collections have shown a shortfall against budgetary projections in each year. I know this year we kind of made a stop and recalculated it mid-year, but this was the first year that that had happened. And you know, we haven't reached the end of this year to know whether or not there really is going to be a shortfall or not.
And this is why I think, and I caution against the practice of using the money because you have it, while I understand that there's a cash managed responsibility. Because how is the body going to come back and looking into 2019 if we're budgeting too much based on the projection, and you might close out the year because you had money from prior years, using that to cover current year obligations, which when we passed the budget, we thought that it was covered. And so moving forward, you know, that money's not always going to be there, correct? And so how are we supposed to work together and solve these issues if, you know, you jump the gun? I think, and that's what I was saying, the SAR fund should exist to be able to put that money in. And if you needed it to cover the shortfalls because of a failure to budget or the projections were off for one reason or another, I'm sure we could have worked on that bill to adjust the appropriation very quickly. But it's hard to keep track of the numbers when, as the money comes in, it disappears very quickly and nobody knows where it really goes. We don't know where the shortfalls are. We don't know what the true shortfall is, because I feel like we're commingling additional unappropriated, unprojected revenues with the projected revenues of the 2018 budget, and they just don't mix. And that's why I'm saying, if that's the practice we're going to be doing, where previous money from previous years, unprojected, unappropriated, can be used in any fashion that the executive sees fit, then I think that lends to the argument that the SAR fund could also be included in future projections.
Well, as Mr. Camacho said, the average of collections may have varied a little, but generally it's around somewhere between, I think he said, somewhere between 26 and 30 million a year. So if that's consistent from year to year, you're going to see the same effect, i.e. receivables are staying at roughly the same level from year to year. It really doesn't make that difference because that's being factored into the average budgetary figure.
I understand that, but I think and to end with this, Mr. Chairman, I think that's a process. If you're tracking 30 million short, because I'm not saying a lack of collections, could be just a lack of payment from the taxpayers, and there's a variance, even if it's under 3%, I think it would have been better to come to the body for us to make an adjustment to the budget, regardless of whether it hits the threshold of a fiscal realignment plan.
If I could, I've just been notified that I need to stop for a few minutes while the tape, or again, show my age, whatever they do back there has